for taking the time out this evening to host this call. So what I want to do is just give it back up to you. I know we are coming to Orlando, Florida on June the 15th. So ladies and gentlemen, if you are on this call, it is so important that if you're in that Orlando market or if you're in that area, that you definitely connect with Miss Edgecombe, because she is definitely somebody that is a significant and intricate part of the movement, of the BYOB movement. And she is hosting the event. She is one of the individuals that's hosting our BYOB Expo in the Orlando, Florida market. So I am so very excited about that and what's to come. So tonight we have something special for you. Tonight we are actually going to be trading. That is what we are going to be doing. We are going to be trading. So we have been significantly going over the BYOB cash out. The BYOB cash out is phenomenal as far as the results. 92% accuracy rate. 92% accuracy rate is the feedback that I've been getting. And so we want to go deeper and we want to go further than just the training, just let you know. So I see trades coming in right now, and of course we're going to analyze them, but as we are getting into this information and as we are going to begin trading, I do want to recap on how you do take the trades for the cash out. I definitely want to do that. So here I actually have the web analyzer pulled up. And when you see the web analyzer, what you see is 1 million families and 1 million families financially educated, 1 million families lives being changed, 1 million families. And that's because this is collapsing time frames. That is because this is so powerful that people are actually trading and in profit while they're still learning to understand the market. So we're going to look at some trades and we're going to take them together. So just to clearly understand, these are the Hikinashi candles. Hikinashi candles. And these Hikinashi candles take away all of the market noise and activity. And what they do is they focus on the trend. The chart that you see before you is a 15-minute chart. So on the 15-minute chart, that means each candle is 15 minutes. So we will have the opportunity to actually see some candles change throughout this call. Now, this is, as far as the green, this is the buy. And when you actually have the buy in the green candle, what you have below it is a PSAR. So I have a buy candle. The green has a flat bottom. The flat bottom means I have a strong trend. So you want these green candles and you want them to be going in an upward position. And then I have my PSAR, parabolic stop and reverse. So the parabolic stop and reverse, when you actually going through the academy, one of the things that you learn is that support and resistance, and the market is always going to move in between that support and resistance. So when you're looking at this support and resistance, understand that that's really what this PSAR is that support and resistance. So it's a reversal. So when it's moving in an uptrend, then you see the PSAR on the bottom, and when it reverses, it flips to the top. So if you notice that when the market is going up, the PSAR is below the candles. When the market is going down into a sell, the PSAR is on top, and then it flips. So it's a reversal. It reverses as the candles move. So that's what this is. That's what the PSAR is. So here's my sell candles. You see that they are flat amongst the top. These are my sell candles. And then I have my stochastic. My stochastic is a momentum indicator. When I have the blue line that flips over the red in a downward trend, I see it's going down, that's an indication of a sell. Because at 80 and above, the market is overbought. So we know the sellers are going to jump into the market. And at 20 and below, the market's oversold. So what this indicator does is it measures that momentum. So you notice that the market always bounces back and forth in between, that is up and down. So it'll start around 20 or it'll go up to 80, and it just continues that same momentum. It actually can go to 100 sometimes, and it'll bounce all the way down to 0. So that's the higher or the lower it is, the stronger the momentum. So you notice when it's going up, I have good, strong upward momentum, and then it comes down, it goes back up, it comes down. So the market is always going to continuously move in between there. So there we have it. That's the BYOB cash out. That easy, that simple. Those are the rules. Those are the rules, period. And that's that. It doesn't get any easier than that. That's what the rules are. And you follow those rules, then you will be, and you'll put yourself in a position of profit. So we have other tools that you can trade this on. Just like Tuesday, we put the BYOB cash out on the harmonic scanner, and I actually use it on pivot. So that's when you're combining other strategies and other tools, because pivots is a way to trade. The harmonic scanner scans the market for looking for harmonic patterns that will give you information on how to trade. So let's see if we can make some money tonight. So these trades, if you're looking at these trades, this was actually called at 9:07. So this is how I trade. When I see, well, first and foremost, when we're on this web analyzer, we want to be on a 15-minute chart. So that's where I'm going to take you all now. You can do other analysis, but I'm going to have you on a 15-minute chart on here. And when we're on this 15-minute chart, we're looking for 10 pips. So when I see that the USD JPY, so I know, because we are in the Asian session, that I'm going to have movement with those JPY pairs. Now, you can trade anything, but I'm going to actually have more movement with those JPY pairs because of the time of the day that it is. So when we're trading on these calls, JPY is probably a good one, or probably one that we're going to want to trade. So when I'm actually looking at this trade, what I see is that it's almost ready. It's almost there. So it's not quite there just yet. So my stochastic is definitely around that 20. And my Hikinashi candles in my piece are still headed for a downtrend. So what I do is I write that currency pair down, USD JPY, because these candles are every 15 minutes. And I know for a fact that this is definitely about to flip. It's going to flip soon. So here we are, that I'm waiting on this trade to actually to happen. So I'm going to write this currency pair down, and I'm going to come back and check it. So this is how I trade. Now, as you begin trading, as you learn, you're going to get your own trading styles, your own methods that are going to help you and say, you know what, this is what I want to do, or this is how I want to take the trades. But this is definitely, I write it down. And I mean, as you can see, just as we're sitting here talking, this wick form. I mean, we're literally sitting here talking, and a wick just popped up, and the wick formed right here. So what does that mean? That means that that's another indication that this currency pair is about to flip and head into a buy, because I need flat tops for a strong sell, right? I need flat tops for a strong sell. However, when those wicks start forming, that's an indication that my trade is about to change. So let's look at another one. Now, it called for a potential buy, but as you can see, that's potential, because yes, when it scanned the market, I'm still around that entry point with that call price that they called it at, but that's just potential. So I use my rules to indicate I don't look at what does this tell me. I'm actually looking at my rules to tell me what I'm about to do, or as far as how I'm going to take my trade. The charts tell me what I need to do. So when I'm looking at this, okay, so when I'm looking at this, what I see is, I see that it's headed in a buy, and I see that my PSAR is still to the bottom. Now look at my stochastic. My stochastic had already started going in a downward trend, but it's flipping back up. So even if I write this currency pair down to come back, this one is not going to flip as fast as that last one that we were just looking at. And hopefully we can actually get a trade to take, because it looks like they're all prepping. You know, the Asian sessions right now with the time they open at 6 and 7, but around 9:30, they really, they really start kind of moving sometimes. So do we have any questions or comments up to now? Because we haven't entered a trade yet, but I'm showing you how I analyze it, and I want to make sure that you all are seeing what I see and what I'm sharing with you all.
Yes, Miss Tasha, that was very good. I totally understand it. This is Sharon, by the way. Just have one question real quick. It's just a technical issue. How do I make my candles larger?
Okay, no, that's actually a good question, because you have to learn how to play with these charts. So if you, sometimes when you log on, you'll see them, and it's all gonna kind of depend on your computer. You can see them kind of like this or what have you. So I just move my mouse. So what I'm doing right now is I'm just moving my mouse, and that kind of spreads this out. But you can also just bring your cursor over the call price / and or pips, and you can hold it and move it up and down. And then I can also grab it across the bottom where the time is, and I can move it back and forth as well. Now, if I want to move the chart, I just click the mouse. I know you can't see what I'm doing, but I'm clicking the mouse, and I just hold the mouse down, and I just move it over. And if it doesn't do what I want it to do at that time, then what I do is it just needs some other movement real quick, and then you can come back over and grab it and move it over. So, and that's how I move the charts. And that's how you make them bigger. So you can just move it up. You can use the mouse, or you can come down here to the bottom and move it. And then you just grab it and pull it around.
Okay, thank you.
You're welcome.
Ms. Dyer, can I just clarify, when you're telling her to move the mouse, you're speaking of the mouse wheel, correct?
Correct. See, and that's why I say it's going to depend on your computer. You are absolutely correct. But see, mine doesn't have a wheel. So mine is just my finger. So on the top of the mouse. So it's just all going to depend on what type of system that you have. So, but if you do have a wheel, then I'm quite sure it'll be the wheels. I've never had the wheel on the mouse since I've been trading. So is that how you move yours?
Yes. If I move the wheel up and down on the mouse, it'll contract or spread the candlesticks accordingly.
Okay. So yeah, it just depends. Thank you for that. So it's just going to depend on the type of computer system, mouse, and just accessories that you have. So like he said, you can utilize the mouse as far as the wheel that's on the mouse, or for me, I just have a mouse that is touch. So you just move it around. I move around my finger and on top of it, and it actually works. So you just gotta, honestly, you have to play with it and get comfortable with it. But that's the gist of how it moves and how it works. So let's check another one so we can take a trade. This one is not ready either. So I mean, all of these were called around the same time. What was that one about to do? Go back. All of these were actually called around the same time. Okay, so you see, it actually 9:15 happened, so we got new candles. So you see how these candles actually form. I know in the training I've mentioned that when these Hikinashi candles form, they form with that bottom. They form with that flat bottom if it's going to be. So this is going to, The strength of these 15 minutes is this is what it is. Now look how that candle's moving. Look how that candle is beginning to form. However, I'm still not taking the trade yet because guess what? I need everything to line up. I need all 3 rules to be there in order for me to take this trade. So now that we are at 9:15, let's go back and check our currency pair that we want to see. We have the green candle. So this is the currency pair that we were just checking, the USD JPY. So we're at a new candle because 9:15 happened. These are 15-minute candles. And guess what? Look, it started forming green. My stochastic is not necessarily up yet. The blue line is flipped over to red. And as you can see, the movement, if you look at it, it's moving slightly. It just moved, but it's beginning to move to flip up. But guess what? I do not have my PSAR flip to the bottom. So there is a chance that something could turn around. This is why those rules are so important. So we don't just want to jump in a trade randomly. We want to make sure we follow the rules to keep our accuracy there. Let's check the other one. We're going to get a trade. It's just all depending on the market. And see, it started coming back down, but once again, look where this stochastic is. It's down. So I'm going to come down some because it had quite a few trades that were called.
I just want to add. I want to add this to everyone that's listening. I guess understanding what Ms. Dyer is actually teaching you this evening is also a part of your risk mitigation, right? This is how you also protect your profits and make sure that when you enter into the trade properly, that is going to ensure that you remain in the position of profitability. So the one unique thing about all the tools that we have, yes, you're going to have the opportunity to have multiple opportunities to get into the market, but everything is really about understanding how to ride the wave, because we do not move the market, we just ride the wave of the market. So if you simply understand to be patient, to watch and do exactly what the chart is telling you, and then you follow rules, then you're going to always be in a position of profit. I can assure you that everything that we're looking at right now, the rules will align themselves, and then that's going to ensure that you become profitable. So the most important thing that we want you to understand and grasp from this session tonight, we will get some trades in, but as a master trader, which you are, when you follow the rules, then you're always in a position of profit. So I just wanted to add that to the commentary.
Thank you. Thank you so much for that. But here's one that's already passed. So this is a good example of, I see that I have a trade. We did not catch it from the beginning. So I'm not going to try to jump into this trade now. So this trade is almost over. Look, it's halfway up. It's almost to the 60. So I'm not on it, I'm on the web analyzer. It's almost to the 60. As you can see, the Hikinashi candles, they actually were flat across the bottom in my PSAR flip. So this trade is literally about halfway over. So if we would have took this trade, so we missed it. And that's okay. Because it's not about taking every trade. It's about the trades you do take, you taking them correctly. So this is a trade that's already passed, but this is a setup that had we seen it from the beginning, we would have taken this trade. So any questions on that? Any questions on that? Okay. So while we're waiting on these to flip, let's look at the pivots, IML pivots, okay? And I already have it set up. So I definitely already have it set up. So you notice how these are the same currency pairs. And let me actually go to the 15-minute. This is the same currency pair that, I mean, literally, that we just saw on the web analyzer. So it's not always it's not always about, I mean, remember, you're looking at the exact same chart, the same patterns, the same exact thing. However, what I'm looking for and what I'm just using different tools to analyze it. So while we're looking and waiting on these trades, let me familiarize you again with the pivots. I love the pivots. So what the pivots are is, I mean, you actually have your P4, which is your pivot point. This is a pivot point. They actually put numbers on them. So I'm explaining to you how the tool works. So the pivot, this is the mid section. This is the middle portion of where you're trading. Now pivots adjust. They're calculated based on the movement of the market, and pivots actually adjust. So above here are your resistance, and then below that is your support. And let me switch to the other strategy so I could explain it in more depth, so you can kind of get a good, I want you to have a visual as well as what I'm explaining to you. Now, if you look, this strategy, you can come to the IMO pivots and just trade the pivots. I mean, you literally, as you can see, that you wouldn't have the stochastic on there. So this is how it will open, and it will open with, I added, of course, I changed the candles and of course added the PSAR. So this is literally what you would see when you come to it. So you actually will have the P4 and they're telling you to sell. So this is strategy 2 that's built into this tool. It's telling you to sell. And when you sell, you know, you're actually looking for, it's telling you where you take profit. So this tool, just like other tools that we've looked at in the past, they do the heavy lifting for you. It does it for you. So you are not having to sit here and go through every single thing trying to figure out how to take this trade or what do I want to do. Now, and they're also telling you where you would put your stop loss. Now, the reason why I switched to this strategy is because this strategy literally uses, strategy 2 uses the pivot point to the 0 line, which is the hardest line to fall below your oversold conditions. That's what this is. And it uses the top resistance line, which says ultimate resistance, extremely overbought conditions. So it's not as common that your pivots, your candles will bounce out of these pivots. Now, they do that, but they typically come back in. And when they stay out or they move out of this area, what happens is, let me move this over. What happens is the pivots readjust. So, because pivots adjust with the movement of the market. So as you can see, this is where the candles actually bounced out. They tested that resistance line, came back in, tested it again. And it typically tests these lines twice. It's going to test support and resistance lines twice, sometimes 3 times, as you can see that. It's very rare that it tests those lines just once. So it's going to test it more than once. So, but what I'm trying to show you is how it actually, the market actually came from above and the pivots readjusted. So what I'm showing you is because these pivots were up above with these candles. So what I'm showing you is that as the market moves, we've talked about market psychology and how it goes up and then it comes back down, you know, and so from the market psychology chart, so as the market is moving though, you see the pivots adjust daily with the movement of the market. So they adjust. So it's not anything that you have to do for the pivots. So if I just wanted to trade pivots, I could open up my pivot chart and I could just take these trades. But how does the BYOB cash out help me? Because if you see, there's my pivot point, my major support and resistance, my pivotal point. Then I have a trading range, the top of the trading range to the bottom of the trading range. Somewhere around 43%, somewhere in that number. So let's just say a little below 45% of your trades actually trade and stay within this trading range. So which are these 2 green lines. So this is how pivots work. So when the market adjusts, right under 45% of your trades, the market bounces back and forth between these pivot lines. Then you have your strong pivot reverse, which are the red lines, and then you have your weak pivot, stop and reverse, place and stop and reverse. And then of course you have your hardest one to fall behind. And that's why we say they stay in between this range. So as I'm showing you this, you could literally just take that, but I'm one for confirmation. I'm one for added confirmation. And that's why I still apply the cash out to the pivots or the harmonic scanner as we did on Tuesday. So I'm still going to do that because I want to increase my accuracy rate when I take a trade. And that's what.
Excuse me, Ms. Dyer, where did you find this? Where's this pivot chart found? Is that in the back office or where did you pull it up?
You should be able to get the link, but if you look, each one of them from your virtual office, but if you look, you see this says imlpivots.com. So if you were to actually go to imlpivots.com, then you would actually be able to log in with your credentials. So just like the harmonic scanner has a site, imlharmonicscanner.com, web analyzer, imlwebanalyzer.com.
Yeah.
Good question.
Thank you. I appreciate that.
No, very good question. And so as we're talking, look at this trade. I mean, without us changing anything, you see it's actually moving. The trade is actually moving downward. So we could have entered this at the P4 and actually been in a sale and already be in profit. And you'll see it, it'll adjust and it'll tell you what to do. And look, a candle, good sale. Us talking and us explaining it, we missed a good sale. But that's like I say, you don't have to take all of them. You just want to take the ones that you take. You want to make sure you take them correctly. So now, once again, I'm going to go to the Hikinashi candles. The Hikinashi candles, do you notice the difference, how they changed all of a sudden? They gave me that flat top. And that's a stronger sale. And I also actually have, let me I'm going to change this. I actually have a dot here, which is my PSAR. That's what my dots are. I can come to indicators here at the top. I can type in, I'm going to type in SAR because you see how it comes up, the parabolic stop and reverse. And that is how I added my PSAR to this chart. So here we are. I'm in a good sale. Now, I'm going to add the stochastic, and I'm going to tell you how it works on something other than a web analyzer. You use it to mark the momentum. As you can see, we're not catching this trade from the top to the bottom. We're not trying to go, this is not okay, I'm going to do 10 pips and dip like the web analyzer. What you're doing here is pivot line to line. So is it going to measure it out for me? Let me grab this ruler. So if I start here and I come here, okay, I got 1 bar. So it's going to depend. So from here is 14. Okay, so from here to here, that's like 8 pips. Come down a little bit, that's like 14. So each one is going to be different with your currency pair. So each currency pair is going to reflect differently. So when I look at my stochastic, like I told you before, I'm not changing the rules. You want to be around the 80, you want to be around the 20. But this is in addition to a tool that's already a tool that already does the heavy lifting for you. So what we're doing with the cash out, BYOB cash out, is confirming and making sure, because like when we did the harmonic scanner, that's an 80%, I guess an 80% accuracy, right? That's what that is. And as we're looking at other things, these are actually calling the trades. So when I'm doing it, I'm confirming. We just got 9:30. Let's go check our web analyzer. Let's check our trades. We were looking at the USD JPY. We're gonna go back, but let's check our trades. The candles just changed. So I can guarantee you this is, let me not say guarantee, but This, you see how it's beginning to look like steps? This USD JPY, so it's beginning to look like steps. The candle is still got a strong green, so it's moving up. The PSAR sometimes flips. It doesn't wait 15 minutes to flip. It just does not do that all the time. My stochastic, you see it's starting to spread. It got a little gap. See, before it was going more sideways, and now it's actually look like it's starting to move. Even though it's a little sideways, it was actually moving almost completely sideways. So, and guess what just happened? The web analyzer actually called the trade again. So this is, look at this. When you see this, I'm gonna get a good trade, pretty much, typically. Because it scanned the market and it told me, now remember, I'm not looking at it's calling a potential sell, that's not what we're looking at. Yes, it does tell you potential sell, potential buy, but we're using our human eye, our human analysis always to confirm what we're looking at. It called, guess what? Everything lined up for a buy and not a sell. So guess what? We're gonna take a buy, and because that says potential. So when it called for called a trade, now I'm looking at a buy. This is where it called it like 30 minutes ago. So around here, I'm like, okay, guess what? We're about to get a trade. And then everything was lined up as going sideways. Then my candles turned around. Now what's happening? It just called it again. It called it again. And so it called it around 109.3. Let me change this back so we can see. 109.345. Now this is just to kind of show you, because I'm not necessarily entering here, but because I'm gonna enter when the rules align. I'm not entering just at this call price. I'm gonna enter when the rules align. So look where it actually called this trade, around the point where we are. So it called this trade again, and this PSAR is going to flip. It's going to flip, and then we'll have a buy. So write that one down, that this is a trade that you should be in your demo accounts. You should definitely be going to take this trade, like, or prepping to take it. This is the other one. So it's doing something else, but let's just, I see, I'm not even playing with this one because the rules don't align at all. I mean, my stochastic is somewhere in the middle. So this is not like what we just talked about, where the pivots actually give you the pivot points, or the harmonic scanner gives you the harmonic patterns. This one, we're following the 3 rules to a T completely. And see that, look at these JPY pairs. So let's just check this other one. I just lost it. So, I mean, they're all prepping, they're all getting ready. I mean, it's just the nature of the market right now. It picks back when the Asian session opens, it picks up, and then it turns around. It slows down. It opens active, slows down, gets active again, and then before it closes, it slows down. And that's why you have so much success when that London market opens, when they overlap a little bit. So that's why that London market is a really good time to trade. So any questions while we're looking at this?
Yes, Ms. Dyer, this is Sharon. Mm-hmm. Is it possible for you to move to the actual trading, trading platform, the MetaTrader 4, and walk us through that USD JPY?
Now, I cannot pull MetaTrader 4 up on this computer. My computer does not. I trade on my phone. So, okay. Yeah, I actually trade on my phone, and that's why when I do the training for the basics, that's why I do the PowerPoint screenshots and everything else, because that is a Windows-based platform and I have a Mac. So, okay. Yeah. you can load it on there, but when I do, it is so slow and so, yeah, it just does not, it just doesn't, it doesn't work very well. So I always trade on my phone. I enter and exit my trades on MetaTrader 4 app on my phone. I never do it on the computer. And
Okay.
that's just a personal preference. Some people don't trade on their phones at all. They actually use the platform on the computer. So it's all just personal preference.
Okay, thank you.
No issues. If I would do it if it would work. If I would do it, I definitely would. But what I would show you would not be, it wouldn't be good because we'd be sitting here till 10:30. I just want to we're going to get a trade. Like this one is almost ready. I mean, on this strategy one, you could literally go from S2 to S6, which are, the red to red. Those are very, very good trading. And then what we just talked about is when it bounces outside of the market, outside of those lines. So who's sharing? Mr. Rogers? I believe Mr. Rogers having some audio issues, so. Mr. Rogers, if you are speaking, we cannot hear you. Oh yeah, he's having some audio issues, so give him just a minute, he'll pull his up. That's what he was trying to do, is to answer your question for you, to actually show you how to enter that trade.
That is awesome. Thank you so much.
He pulled it up, so just give him some moment.
Ms. Dyer, this is Mr. Buckley. I have a question for you. So you have to kind of analyze the trade, analyze what's going to happen to your Hikinashi candles before you decide to jump in the trade, correct?
Right, not just the candles. I'm looking at all three rules, but yes, I want to.
You want to make sure that it's going down and then it's getting ready to go back up before you decide to jump in the trade, right?
Correct.
Okay. All right. Got it.
Mr. Rogers, you back on?
Yeah, Ms. Edgecombe, what was your question?
She was trying to enter the trade, so I'll let her ask you back because I saw you pull it up, but we couldn't hear you.
Yes. So, Mr. Rogers, I have USD JPY pulled up on MetaTrader 4, and I click on Market Execution. And is this okay? So I didn't remember if this was a buy. What are we actually doing on this one?
When the trade is ready, it will be a buy. It's almost ready, so yes, it will be a buy.
Okay, so on mine it has buy limit and a buy stop.
Well, you said market execution, so it's neither one of those. Market execution simply means that whatever the price is, you go directly into the market.
Okay, so I just leave market execution there?
Yes.
Okay, okay.
So do you see why? Are you an iPhone user or are you a Droid user?
I'm an iPhone user.
So
Okay,
when you have an iPhone, it will say buy the market.
Oh, I see that. Yes. Okay.
and it says also that on the bottom as well. So if you look at on my screen, you see at the bottom,
Yes.
same thing. Market just says sell by market or buy by market. So it's the same thing.
Okay.
Right.
Thank you very much.
Does that answer your question?
Yes, it does. That answers that question, but I do have another.
Okay, go ahead.
Thank you. Has the stop loss and the take profit already been calculated?
The stop loss and take profit is what your preference is on this particular strategy. When you look at, we recommend for a stop loss that it's right maybe 2 pips below the PSAR or above the PSAR for your stop loss. And then your take profit is going to be a minimum of 10 pips. So whatever your call price is, you want to add 10 pips to that for your take profit. And for your stop loss, it's best practices to put it right, maybe a pip, 2 pips beneath where the PSAR is indicated or above.
Okay, thank you.
While you on there, Mr. Rogers, I don't know if that's demo or your real account. Can you, since you actually have it up, show them where the stop loss? I think, because I know you can't see my cursor. I don't know if on your phone you can actually, yeah, right. Okay, that's what I'm asking.
Yeah. So for you draw users, your stop loss will go here on the red side, and your take profit will go on the green side.
And see, on the iPhone, it's the same spots or what have you, but it just says, it actually says take profit, and it actually says stop loss. And so on the drawers, it's just green and red. But on the iPhone, it'll actually say your take profit and stop loss. And so you have to manually enter that right there where he's at. And then where that 1 is, can you move the cursor up to where your lot size, right there? That's where you enter your lot size. So you see he actually has, his lot size, yeah, there you go. That's where you want to enter your lot size right there. And you have to manually enter that. That's why we always tell you that what we're showing you is how to calculate, how to obtain the pips, but you actually have to enter the lot size yourself, and you have to enter your pips and your stop loss. But your market execution, like the picture that I posted today in our group, talked about the buy stop, sell stop, buy limit, sell limit, but market execution is not on that chart, because market execution is not something you have to calculate. It's not any of that. Market execution means I'm going in the market right now when I click buy or sell. I'm actually live in a trade. That's market execution. I'm executing it right now. That's what that means. And that's what we use on this strategy, is market execution. So did that answer your question? Before Mr. Rogers just stopped sharing his screen, and I'm very glad that he was able to do that. So is there any more questions or comments on that, what he just had pulled up, while he still has it pulled up and have access to it?
Ms. Dyer, can I just add to what you all were just saying? And if you could probably pull a chart up to kind of show the individual that may be novice on where the price action actually is when you say you put it, you do market execution. That means wherever the price action on the side where you see the green and the red numbers, wherever the price action, wherever it's moving at, that's when you push the buy button or the sell button, which in essence is execution. It will go in right at that point wherever the price action is moving. Correct?
Correct. Absolutely. So for example, right, and this one is just gonna play with us. That's what it's gonna do. So just to kind of show you, for example, this is where the trade was called. So I dropped the line and where they called the trade. However, all my indicators are not there. So for whatever reason, whatever the market is doing, the PSAR has not flipped. So everything is lining up, but this PSAR still hadn't flipped. But I'm going to just say that it has. Like, I'm going to just say that it has. So if it would have done that, like when Mr. Rogers had his screen pulled up, we would have hit market execution, bam, right there. Because that's where my candidate, that's literally where I'm entering the market. If I would have had my phone up and I would have clicked market execution, this is where I wanted to enter the trade. And just like I've said on a previous call, and I want to reiterate this, you are taking the trade, but you don't want to spend a lot of time calculating your pips and doing that. You want to make sure you enter it right then and there, and you know your 10 pips. You know your stop loss. You want to make sure that you have that information and that you're going to take that, you want, because market execution means I'm doing it right now. So let's say this candle was continuously moving. I wouldn't have entered this trade to somewhere up here. So I've missed out on money. I missed it because I didn't enter the trade because I was sitting there calculating my pips or what have you. So the market is going to keep moving. It's about a successful trade is proper entry and proper exit. So you want to, that's why the rules are so important, and analyzing it correctly is so important, because a successful trade is proper entry and proper exit. So I don't get caught up on the technicality of this is when a trade was called right here, because I can count I'm gonna do my 10 pips from where I entered the trade, but you just heard the market execution is where I'm doing my 10 pips as long as I'm close to this call price. But I don't want to sit there and do all the calculations, because you just heard Mr. Rogers say that you're going to do the 10 pips from where you enter, like this entry price from this where we executed from but you see, you want it close to that call price. So I don't want to enter the trade way up here somewhere and it was called down here. But as long as you're really looking at the rules to line up and enter right. You notice that even though my PSAR hadn't flipped, my stochastic is moving up. It's moving. So I don't want to do 10 pips from way up here, because that is how it doesn't meet what you're looking for. You want to make sure that your 10 pips are from somewhere down here where the trade was actually called, because that's when it scanned the market. But, if you saw this and you saw the stochastic and you entered the trade, you take it, it lowers your accuracy rate. The reason why we have all three rules is to get you to that 90+% accuracy rate. So here is, let's look at some trades. We're supposed to be live in the market. Here's another one that just began forming. I just clicked that one. That's the one we just came off of. And this is the one we said, now here we go. This one, actually, the PSAR flipped on us like it should, strong sell candle, but my stochastic is in the middle. The stochastic is in the middle. It looked like it was going back up at first, and now my stochastic is in the middle. This is a 50-50 chance. This is a 50-50 chance. So this is why I tell you want to be closer to the 80 and the 20, because this is a 50-50 chance. It looked like it's still going down, but this is why these rules are important. It's a 50-50 chance that I'm going to have a successful trade and hit my take profit, or 50% chance that I'm going to hit my stop loss, because you have no other indications. You have no other analysis. You don't know if I'm trading a pullback. You don't know if I'm trading, if the market is in an uptrend, a downtrend. You don't know what you're trading on a 15-minute chart. In order to know what you're trading, you have to analyze it on a higher chart. And that's why when I mentioned this over here, like on the pivots, when I said it about that, you actually have the pivots in the pivot strategy that you are confirming with the BYOBCashout. So it's important here still, but you have more leeway. Whereas on the web analyzer, you don't know what the market is going to do, because look at what's happening. It's a 50-50 chance. It could turn around. It could not turn around. What is the market going to do? So that's what it is. Any questions on that? Because you would want to jump in this trade. When you see this, you be like, okay, I'm ready. I want to get into this trade. But guess what? Look at my stochastic. Look at my stochastic. So it's about proper risk management, not just, oh, this trade feels good. Proper risk management, you want to grow your account. You don't want to have 9 successful trades and then blow it on one. Because even look at this. Your stop loss is above the PSAR. That's the recommendation, because remember, support and resistance. The market moves in between support and resistance. So it's not going to go outside of the PSAR, until that market actually turns around. If you look, it never goes outside the PSAR until it flips. When it flips, that's when you will see it pass. So if this flips back up, look at how high this is. Look at the gap. See, some of them, they're close, and then some of them, they're wider. So it's just all about proper risk management, because your stop loss is going to go outside of that PSAR. Not on the PSAR, because on the PSAR is on that support or resistance. You want it above.
Ms. Dyer?
Yes.
It's Alfred Buckley. Question for you. So, again, I know everything is different, but are you also saying that you want to be, you want it to be in a supportive stage, and then you want to see it grow and go down to 20 and then go up to 80? Is that, you're saying that's your perfect situation?
For the stochastic?
Yes.
Okay. The rules are a perfect situation. My stochastic is going to start around the 80. See, the market moves between the 20. I mean, not just the 20, because it goes below. The market moves. This is measuring the momentum. So it's not measuring pips, it's measuring momentum. And so as the market moves, you see the stochastic move up, and it comes down, and it just continues to bounce. It cannot go outside of 100. It cannot go outside of 0. It's going to stay in between 0 and 100. This is how this indicator is set up. So if I go back, the more I go back, the more I look, I see my stochastic stays between 0 and 100. However, when it's around 20, the 0 to 20 means it's oversold. That means that the sellers have had so much control and so much momentum of the market that the buyers are going to jump back in and take control. So you know that the market has to move back up. Remember, we ride the wave of the market. We do not move the market, but we ride the wave. So if I know where the market's going, if I know, I don't control traffic patterns. But if I'm on a one-way street, I know I have to go in that direction. If I see a sign that says a U-turn, I know I have to turn around. So this is nothing more than a road sign. In order to successfully trade, you just have to learn to read your road signs. So look at it like you're driving a car, literally. It's no different. I read my road signs. I read my road signs. And when I read my road signs, I'm successful. This keeps you from getting on the wrong way on the highway. Those big signs that say do not enter. If I'm up here, I'm not going in a buy, because the market is overbought. That means it had a lot of buyers already in. The buyers were in control. So if I'm up here, I'm not getting in a buy. That's like you getting on the interstate in the wrong direction. So I want to be up I want to be selling from this point. I always want to be selling from 80 to 100. I'm always selling. If I'm 20 and below, I'm always buying. So, because this is the momentum, this measures the momentum. So the momentum is about to shift. The momentum is changing. And that's why this is so important. Now, but all that does, I'm not trading the stochastic. What I'm doing is I'm confirming my trades with the stochastic. So you look at my Hikinashi candles, that's rule 1. Rule 1 is Hikinashi candles. A flat top, first things first, a green candle means buy. Green candle means buy. Red candle means sell. Period. That's the candles. Flat top means I'm going into a sell. It's a strong trend. The red candles is what tells me it's a sell. The green candles tell me it's a buy. However, I know I have a strong trend when the top is flat. I have a strong trend for a buy when the bottom is flat. So imagine you just pushing it up. You don't want to push on wicks. You want to push on something flat. And the same thing, the market is pushing this down, and it's pushing it down so hard that it's flattened out. It's strong. Now the PSAR is that reversal. It's that reversal. That's what it is. So my PSAR is also, when it's at the top, it's in a downward trend. When it's at the bottom, it's in an upward trend. So when I combine all three of those, right? When I combine each and every last one of those, then I have a strong trend. And that's what I'm looking for. So, I mean, here we were. I had a red candle, had a flat top, my PSAR across the top, my stochastic is lined up. So I know for a fact the sellers want in because the buyers were in control. This is where the momentum is at because that's what this does. So now I can go get my 10 pips. I can go get my 10 pips. See, this one went for more than 10, but the rules tell me 10 pips. So I'm not going to get greedy on the 15-minute chart. On the 15-minute chart, all I want is 10 pips. That's it. And I just set my take profit for 10 pips, calculate your 10 pips from where you entered the trade and, you know, from where you're doing your market execution from, which should be close to your call price. Or if I'm looking at this, like if I would have called it myself, then my 10 pips is literally from where I entered the market from. And there you have a successful trade. And that's how we win it. And I mean, this applies to everything. The Forex, it applies to cryptocurrency, it applies to indices, and it applies to metals. I mean, literally. I want to look at Bitcoin real quick before we close this call out. Here's a cryptocurrency. Same thing. Cryptocurrency looks so much different with these Hikinashi candles. It looks so much different. So, I mean, look at this. Flat top, PSAR, stochastic. I mean, and of course, you're going to have to use this because cryptocurrency, the pips are calculated differently for each one. So I'm not even going to get into that on this call. Now with 2 minutes left. So any questions, any comments, because we are at that time. And watch these currency pairs. I mean, you should be able to trade these and come out with some success tonight. I mean, literally. Because here we go. Look at this one. This one is about to hit. It's going to be there soon. So these are, you all should be, and see, this is why we didn't take this trade. Look at this candle. Look at the wick that began to form out of it. This is why those rules are important. Look at that wick that's forming out of the bottom of that candle. It wasn't there at first. This is why these rules, what do the wicks mean? Wicks mean trend reversal. Wicks mean that it's a reversal coming. So this one is not done selling. So this is about to turn, look at that wick. That's why we didn't jump in that trade.
Miss Dyer. Miss Dyer?
Yes.
Yes, I think you just touched on Bitcoins, and you see, because of the time, for time's sake, you're not going to go into it. You can't go into it. But will you eventually, or will we be diving into trading cryptocurrency as well?
Yes, most definitely. And great. What I want to do is actually do more live trading because we have been doing training. And I want to definitely get back to where we are trading together on Thursday so we can actually take some, look at that candle that just formed. You see it's forming red? When you begin to see this and you begin to read it, you understand why these rules are so important. That candle is literally, it flipped, and that wick means trend reversal, and now I have a red candle forming. Follow the rules. It's 92 and above % accuracy rate. And this is why. If you would have entered that trade without that piece or flipping, the trade will turn around on you, and that's how you not at 100%. Because here you go. Somebody would have took that trade without all of the rules. The rules are so important. But back to the crypto, yes, we're definitely going to do more live trading together. We're definitely going to be trading in the market together. We're definitely going to be doing that so we all can actually begin winning together and catching pips, making money, cashing out. That's why this is the BYOB Cash Out. So, ladies and gentlemen, tonight we do not have a talk with the finance doctor. We do not have a talk with the finance doctor. He is actually celebrating his daughter at her graduation. So I'm excited for Dr. Bythewood. We know that he is definitely loyal, dedicated, and always here for us and with us. But just as a reminder, as we close out this call, what you also want to remember and mark your calendars. Mark your calendars. June the 15th, Orlando, Florida, BYOB Expo, Be Your Own Bank Expo. You are in driving distance. Make sure that you are there. Everyone needs to register for July the 20th. July the 20th, we have our leadership and development. Leadership and development. You want to be in Jacksonville, Florida on that day. BYOBchallenge.net. Get registered. Get registered. You definitely do not want to miss this. This is the movement, 1 million families. The 28th of March, 2021. The same way the movement has a date scheduled for success, the same way the BYOB movement has a date. Write your date down. How many of the 1 million families are you responsible for impacting? How many of the 1 million families do you want to financially educate, and do you want to be a part of that movement? Write it down. Make it plain. Write it down. So you will have the ultimate success. You are an expert trader. You are cashing out. You are winning. You want to write that down. And on top of that, we have a BYOB VIP call on Tuesday at 7:30 Eastern Standard Time. This call is specifically designed to share the information to make sure that we are educating and we are financially impacting 1 million families. And that's what that is for. So with that being said, ladies and gentlemen, I definitely, if you are building distribution centers, and you are building ATM machines, Sunday night, 8 p.m., we will see you on that call. So ladies and gentlemen, you all have a wonderful and blessed evening. Do not forget those currency pairs and watch them, because you can go get your 10 pips, get out the market, cash out. With that being said, Dr. Bythewood will be back next week on Tuesday and Thursday. You'll have a wonderful and blessed evening, and this will officially conclude this call.
Thank you, Ms. Dyer.
Thank you.